Hey everyone, welcome to the Bitcoin show here on Prof Sales YouTube channel. And if you've ever wondered about investing in Bitcoin, what the heck even is Bitcoin? Yeah, I think you turned down your volume there, Bennett. I'm sorry.
I did. Here, I turned it back up. Can you hear me?
A little echo there. Sorry, that's my bad, I think. And sorry about that, guys. Had a little echo there. But yeah, this show is all about investing in Bitcoin, what it is, how you go about doing it, where you how you get started, like what sort of assets you might be thinking about and trading and so on. And I got to tell you guys, like, full disclosure here. First of all, let's make the standard disclaimer here that's on the internet. Not investment professionals here. Invest your own money. If you know you're risking your money on something, that's great. Do not think that we are professionals and we're giving investment advice here. We're just here to provide information. If you want to take that information and use it, awesome. That's up to you. But in no means are we saying, hey, go out and do absolutely this. So I just want to be very clear about that. So nobody's like, hey, but you told me if I did this, Bennett or Prof, that I would make millions of dollars. Nope, that's not what we're going to tell you.
I agree.
But that being said, I decided, you know, I needed to bring on some big guns to the show because I couldn't carry this alone by any stretch. So I have Bennett Stein with me tonight. Bennett, how you doing tonight, my friend?
Good. Glad to be here, man.
Bennett is someone I found recently on YouTube, probably a few weeks ago. And I always, when I find somebody I'm interested in and watching, you know, I'll just start binge watching their videos. It's like a new series coming out on Netflix, you know, you start binge watching. And I'm like, man, I like this guy. Like, he is like high level. He talks about exactly what he's doing. He answers all the questions and comments on his YouTube feed, which is amazing. Like, I struggle to do that. And I thought, you know, I know there's a lot of people out there right now who are interested in Bitcoin and cryptocurrencies in general. So I thought, I'm going to see if I can get this guy to come on and talk about what he's learned. So, and of course, he's been good enough to do that tonight. I am very thankful about that. But enough about me. This is Bennett's show. So, Bennett, why don't you introduce yourself and tell everybody a little bit about who you are and your background and how you got started in this in cryptocurrency investment game.
Yeah, man. Thank you for having me on your show. So I'm a 20-year-old college student. I know, a bit young, but I've been trading for about 6 years. So let me just tell you about my investing trading journey. So I began trading stocks and investing in passive portfolios like Amazon, Tesla, Best Buy, you know, like just simple growth companies for a few years when I was much younger. So that was like my skin in the game. But that wasn't really satisfying my need for more active trading and for more pattern recognition instead of just value investing. So I went to Forex. I went to the foreign exchange, which is trading currencies cross rates. That's like the USD JPY, the Euro USD, stuff like that. So that was my intro to currencies. And then about a year ago, I entered the crazy world of digital currencies and blockchain. And I started my YouTube channel, the Bitcoin Trading Challenge. It's down below. The reason I chose that name was my vision was to create a channel where I show people how to trade. And I had a challenge on the side that was going to see how much money I could run up trading with those techniques. And the reason why I created the channel was earlier in my trading career when I was trading Forex and began trading crypto, I wanted to find good production quality and very helpful and to-the-point videos about strategy, about market theory, and I really couldn't find any. So I said to myself, what if I just spent a few months just working and working and working and analyzing markets, taking notes, taking notebooks full of notes, videos, articles, and just learn as much as I can, and then try to share this with other people. And that's what I did. So I made the Bitcoin Trading Challenge as a result of both my need to share all the information that I had taken in, and also as a personal challenge for me to try to grow an amount of income in the cryptocurrency world.
Right. So, and just a disclaimer here, guys, there will be acronyms and terms.
Yep. I think I already hit you with a few with the Euro USD. And
you did. So, but if there's anything that you guys don't understand, there's a live chat going on right now. You can leave a comment, and we'll do our best to answer it, or Bennett probably will, because I probably won't know what it is. But so let's talk about this idea. And I know you and I were talking about before the show, we're not going to get like real deep into the blockchain and so on, but what's this, just in general, this idea about cryptocurrencies and coins, like just like a brief, quick explanation, your level of knowledge about them. What exactly are these things? I think some people are just still wondering that.
All right. I'm just going to give, I promise this will not be super complicated. I'm just going to give a quick 2-minute overview over 3 things. What are cryptocurrencies? What is the blockchain network? What is that? And also, why do I care? Why not just use fiat USD or fiat dollars? So let's start off with what are cryptocurrencies. So cryptocurrencies are digital currencies that are used as a means of exchange on the blockchain. They're called cryptocurrencies because of cryptography, and that's where the crypto part comes in. And cryptography is the act of encrypting and decrypting a transaction to make sure that it is safe and that it is going to the right place. And that brings me to the blockchain network. And blockchain is where the digital currencies are transacted. Imagine it like a massive online public ledger where all previous transactions have been held. And this isn't new, but the new thing about blockchain that the world has never seen before is that it is decentralized. And you've probably heard that word thrown around a lot, decentralized. So, what does that mean with the blockchain? Well, no one owns it. No one owns the blockchain. No company, no man, no woman, no central bank. It owns itself and it regulates itself. And how it does this is through blocks within the blockchain. And that's where blockchain gets its name. And each block contains a group of transactions. And I'm not going to get more complicated than this, but with each transaction, you have 2 parties, right? And you also have 2 things that you need to remember. Every transaction has a public key and a private key, also known as a secret key. So if I want to send, 1 Bitcoin to you because you've offered me a good or service, I'm going to send that to your public key using my public key, right? The public key is known to everyone on the blockchain. It could be on your wallet, it could be on an exchange, it could be anywhere. I've even seen people put their public key, at like tailgates of college football games, and you see it like on the screen, like, oh, send Bitcoin here.
Nice.
Yeah, that's like your public address, what you can send out to the world, and it is completely safe. But you also have something called a private key, also known as a secret key. And that is something that you can use to decrypt that transaction and to decrypt the data when you send it. So if I send you 1 Bitcoin to your public key from mine, what you're going to do is your secret key is going to decrypt that data so that the blockchain knows that you own that 1 Bitcoin and that I sent it. And that's basically the decentralized nature of the blockchain and why it's so cool and revolutionary. And the reason you might be wondering, why do I care? Why not just use fiat USD when I'm buying goods and services, or Venmoing or giving money to someone else? Well, even though it might, with the news articles and everything that's happened, it might seem like Bitcoin is not safe, but it is actually much safer than fiat USD. And here's why. If I want to buy a good online, or if I want to buy someone's service online, what I'm going to do is I'm going to put my credit card info on that site or another site like PayPal, and then send that there, and then I will have that good or service. But the issue with that is that my credit card info is on a site. And I'm putting my credit card info on a lot of sites for those goods and services, right? And typically that's safe, but with a hack or with a fishy site that gets your password and gets your credit card info, problems can arise. But the fantastic thing about blockchain technology is that if I'm going to buy something or sell something, what I can do is just give my public key, and that cannot be manipulated. So that means that if I want to buy Bitcoin, if I want to buy something with Bitcoin, then I don't need to put any of my credit card info. I just have to put my key. And that makes it a lot safer than putting like my credit card on a site.
Yeah, and that seems to be the beauty of Bitcoin and these cryptocurrencies, this idea that Nobody owns them. Nobody has complete control over them. And in a sense, kind of everybody controls them and has to agree on transactions.
Yep.
And that's kind of a unique idea. Instead of hiding something behind walls and encryption and so on, instead you say, hey, everybody's got to agree that something happened before it really happens. That's kind of keeping this ledger, this blockchain of transactions. So, and there's a lot more to that, guys, you can find out there, but that's not really the thrust of the show. But we wanted to talk about this idea about investing in coins and investing in cryptocurrency. So how do people even, like, first, what does that mean? I mean, are these investments like, you know, typical stocks and bonds and T-bills? Or would you categorize them that way? And how do people get started in that?
Okay. Yeah. So to answer your first question, how do these operate? How does the market operate? And then your second question was, how can I invest or trade them? Well, this is something completely new. Most markets are open around 12 hours for 5 days a week, like trading U.S. equities or you know, stocks. That has a set window. And even trading things like Forex with currency exchanges, that has a set window, typically 24 hours, 5 days a week. Cryptocurrencies are completely different. They're open 24/7 for traditional. For futures, it's a bit different, but for the regular cryptocurrencies, they're always open.
Wow.
They will always be trading. And that is something that is not normal in the financial world. Also, the big elephant in the room that makes cryptocurrencies different than any other asset is that it's completely decentralized. I know I'm throwing around that word a lot, but basically, whenever you hear decentralized, think, I have total control over my money. I have total control over my Bitcoin. It is completely protected. And there's no bank, there's no central bank, there's no Chase Bank or Charles Schwab or any exchange that actually has it. I'm the one who has it. And yeah. So your second question was, so how do we like invest or trade, these virtual currencies? Well, there are a lot of exchanges that you can use, and there are a lot of pros and cons between these different types of exchanges. But the first thing I want to say, there's two types. We have wallets and we have actual trading exchanges. So with a wallet, that would be something like Coinbase, which probably a lot of you guys have heard. If you Google buy Bitcoin, Coinbase is probably going to pop up. That's a popular wallet. And there's also trading exchanges like GDAX, which I think you use.
Right.
I use GDAX, and there's like Gemini and Poloniex and Bitfinex and some others. And for those interested in trading or in investing, just a quick rundown of the exchanges. So Coinbase, if you just want to buy and sell and send Bitcoin, is fine. But Coinbase also has something called GDAX. And the fantastic thing about, I don't work for any of these companies. I just want to say disclaimer.
Disclosure.
Yeah, this is just my analysis of different exchanges that I've used. So GDAX is great because they don't have any fees for limit orders. So what that means is if I want to buy and sell something at a specific price, GDAX will not charge me any fees, which is fantastic.
Yeah, I have been learning that recently, and I'm like, limit orders are your friend.
Always use limit. You don't ever want to use a market order. I can't see any reason to. And also, deposit withdrawal is 0% fee, nada. So you can throw money on GDAX. You can buy and sell for free. And so the reason you might be thinking, wait, how is that possible? Aren't they scamming me? Well, the reason why they allow you to trade for free is because you're providing something called liquidity in the market. Your orders that rest on the order book, as it is called, is going to provide the exchange to work. Right. So that's why they offer no fees. Then there's also Gemini that was started by the Winklevoss twins, and I use that as well. And Gemini, I'm not going to go super deep into these, but Gemini is special because they have an auction where they, unlike any other exchange, they actually auction their Ethereum and Bitcoin during a certain 10 minutes of the day.
Yeah, and so just to kind of recap for a second, because some people are just filtering in. So you have these wallets or exchanges, and exchange is kind of maybe a little more comparable to what you think about when you think about like Wall Street or the New York Stock Exchange, and these numbers are flying around, you're seeing graphs. Yeah. Whereas wallet's a little simpler for people, but it does have a higher fee structure generally.
Much higher for Coinbase than compared to GDAX, yeah.
Right. So, and we're not advocating that one's right or wrong here. We're just saying that
there's pros and cons.
Right.
Yeah.
So people can put money on one of these exchanges, one of these in one of these wallets, And then they do what?
Yeah, so this is where the fun part comes in, where this is what I love to do day and night, which is trading. So trading cryptocurrencies, I know, sounds super volatile and risky. Yeah, so on an exchange, not a wallet, because we can't really trade on a wallet because of the delay times
Right.
for when you buy Bitcoin or sell it. But with an exchange, you can trade as often as you want to. And for those who, most of you probably know this, but you want to buy low and sell high, and that is how you can make a profit. Typically, most exchanges in the US don't allow shorting. So we can only really expect to make money if we buy something and it goes up. But we can't really sell it short to make money of it going down, unless we're talking about futures contracts or margin trading that's not inside the US. But yeah, so one more exchange that I've been using a ton recently, and I think if anyone's interested in doing this, you should use Poloniex, P-O-L-O-N-I-E-X. So this exchange allows you to trade altcoins using Bitcoin or using Ethereum or any of those main digital currencies. And you have full access to dozens of altcoins that you can trade. And yeah, that's a good one.
So Gene Talbot says, hey, I got my $200 here, Bennett.
All right.
And I want to get started. Now, we're going to talk here in a moment about investing versus trading, because those are two different topics. But what would her options be? She's got her, and I'm assuming it's a she. I can't, Gene, it's you. Sorry if you're not, Gene. And so what are her options, that she could, would she just put in her credit card info, a banking account? I mean, obviously there's a process for that. But once she's got her money on an exchange or in a wallet, then what?
Yeah, good question. So with the three exchanges that I just mentioned, Poloniex, Gemini, and GDEX. So you can put your credit card info and you can deposit USD onto GDEX, Coinbase, and on Gemini. And GDEX and Gemini will not charge you any fees. So if you want to start trading, then I would recommend you probably use GDAX. You can also use Gemini as well if you would like. Poloniex is different if you want to. It's a bit riskier, but it gives you more trading and investment options if you would like to trade altcoins. But you can't deposit US dollars onto Poloniex. You actually need to deposit onto another exchange or a wallet, and then you can buy Bitcoin and then send that Bitcoin to Poloniex to trade with, if that makes sense. But you probably don't want to do that with your 200. I'm not assuming, but I'd say, just for a helpful tip, if you want to get your feet wet, try out GDEX.
Right.
And and go from there. Maybe watch a few of my videos.
And watch his videos. And again, just to reiterate, guys, we're not offering specific investment advice. We're just giving you information about how you can
just tips
invest if you want. Okay, so now let's jump into this investing versus trading, because I got to be my full disclosure here is all my life I've never really been a trader. That sounded bad. I've never really traded, different word, until fairly recently. And it is definitely a different animal than investing. What's sort of the difference between those, and why do you prefer seemingly trading? I'm assuming you do.
I do. A little Bitcoin trading challenge. I would hope I do. So difference between trading and investing. Investing. So trading, what we're doing is we're actually trying to use supply and demand and inconsistencies in the market to make a profit. That's just the basic theory. So if we believe that the price in the short term is low and that that there's a lot of supply and that future demand will probably come in, then we want to buy and sell at a better price. Investing is a different animal. We don't have the same mindset as trading, where we're trading off those supply and demand and inconsistencies in the market. Rather, what we're doing is we're evaluating something and finding if it's a potential, if it has great future growth, if it has good metrics. For stocks, we'd probably be doing DCFs and like stuff like that.
What are DCFs?
That's cash flow analysis. So yeah, but that's stocks, which I don't do too much of. But that's for evaluating like traditional companies.
Gotcha. If
you want to do that. But crypto, the weird thing about crypto is that there's no actual stuff like that. There's no metrics behind these cryptocurrencies besides just like hash rate and difficulty of mining. So investing in crypto is kind of strange because we don't have those same evaluation metrics that we can use. But what a lot of people are doing is investing in the technology behind Bitcoin and the technology behind Ethereum, so that in the future they can be a proud holder of Bitcoin or a proud holder of Ethereum. And if you want to pick either one to do, just ask yourself, do I want to be a trader or an investor? Do I want to hold on to something and invest for the long game? So even if the asset goes way down or way up, I'm going to hold it because I'm investing in that technology, not as much the asset. Or do I want to trade it and try to pick different levels that I can make money off of? And that all depends on your risk tolerance and how you want to trade. So that's, I think, my hopefully simple answer of difference between trader and investor.
No, that definitely makes sense. And
okay.
I think for a lot of people, we probably come at it from the investment standpoint. I'm going to buy this today, 6 months from now, a year from now, 5 years from now, it'll be worth hopefully more, some level. And,
hopefully.
Right. And let's be clear here. Anytime you're putting money into something, there's always a risk. Life is all about risk, really. And you and I were talking about the poker analogies earlier, but life is risk, and you have a risk to your money stuffing it under your mattress. Inflation eats away at its value. You have a risk, every time you walk out the door, something can happen that's not so great, or something can happen that is great. So we're talking about managing risk, and that's maybe a whole different discussion there. But so take us through a trade, and it's so funny that Gene mentioned the $200 earlier, because that's going to come up again a little bit later. But so you've got this $200, we'll say, let's just say it's on GDAX. That's the one I'm sort of familiar with.
Okay.
And let's say you had $200 and you wanted to make a trade. I could even show a screen share if we wanted. I could show the GDAX screen if you wanted to talk. I don't know if you could really see much because it would be on my end.
I can actually see a large part of the window. So if you want, I can point out different metrics if you'd like.
Yeah,
which might help people with the platform.
If I can pull one of those up here to just kind of show.
So walk you through a trade of what am I going to do with that 200?
Yeah, and I'm going to throw up here. I've been kind of a fan of Litecoin today, so I'm going to just throw this on here, and we'll just kind of show you guys. And this is going to look super intimidating, but it also looks kind of super cool, I think. That's just me.
I promise we're going to break it down and go from there. Okay, so we have Crypto Watch. This does look very intimidating. So all this is not an actual exchange, guys. This is just a way that we can analyze these coins. So we're not actually trading on these, but we're actually just analyzing prices.
Let me get back to this. Sorry.
Yeah.
There we go.
Let me just.
It's a little sluggish.
No, it's fine. I'll explain each component of what we are looking at. Are you going to LT to Litecoin?
I'm trying to. Okay. There we go. Yeah, I'll go to Litecoin just for fun. Yeah, it's just taking a moment to get there. Okay. My computer's like, hey, too much.
Okay, so at first this is naturally going to be super intimidating, but let's just break this down block by block, and then we'll talk about what do you do with that 200. Okay, so bottom right, you see those flashing numbers where it says yeah, you got it. That is our trade history. So red is going to be sell, and green is going to be buys. So every trade is a transaction between two parties, and there's always going to be one limit order and one market order. And what's listed here is the market order. So what that means is that these people who are popping up in red, these people sold at a limit order, if that makes sense. So someone put out a buy limit order, and then a trader sold a market order at that limit order. I know it's a lot of order stuff, but
it's flying.
That's very volatile right now. Yes, that's trade history. Above that, we have something called the order book. This is just where all resting orders lie. And if you remember what I talked about before about the no fees thing, the reason they do that, because they want your orders to rest on the order book. That is the order book that people can trade off of using market orders. And then to the left of that, we have something called the depth chart. So the depth chart is just a visual representation of the order book. So it's really not much more than that. And then if you even go more to the left where it says those prices, but there's also those, you see those red and green lines? That's the same thing as the depth chart. It's the exact same. It's just overlaid onto price. Okay.
Gotcha.
Yep. And then we have bottom left, we have the classic MFI MACD. Yeah. money flow index, and also the MACD indicator. So what we're looking at here, these are two, for those who, I should probably give a preface of what this is first. These are technical analysis indicators. So what this is telling us is the momentum and the lack of momentum in the asset that we are trading. So MFI is telling us when something is overbought or oversold. And what that means is that when we see MFI turn white, so what he's hovering over is MFI, and we have that little white top right there. That white indicates overbought if it's one of the top whites, and the bottom one, yep, exactly, that's called oversold. Typically, we want to buy at oversold and sell at overbought because it makes sense that we want to buy something that everyone else has already sold, and we want to sell something that someone else has already bought. That might sound a little strange at first, but that's actually the whole theory behind trading.
Yep.
Typically, and this is going to sound strange too, but you typically want to do the opposite of what other people do in the market. That's how you can make the maximum profit. So I love to give this example on my channel, and I'm going to give this example for overbought and oversold so you guys can understand this. If we have 100 people in a room, right, and every single one of those people buys an asset, can the price go any higher? If they spend all their capital trying to buy that asset, can we get the price to go any higher? Actually, no, because they've already bought it. So the price can only go down because there's no more potential buyers. And the same with oversold. If everyone holds an asset, then everyone sells that asset, can the price go any lower?
Right.
No, it can't go any lower because no one holds it. They all already sold it. So what we're doing as traders is looking for those oversold and overbought points where everyone's already done something, and then we do the opposite because we want to be the first buyer of an uptrend. No, that makes sense.
Right.
We want to be the first seller in a downtrend. So what he showed us was MFI, which uses volume and also momentum in the market to gauge these spots of where it's indicating everyone has sold here. It's indicating everyone has bought here. Right. And we want to trade when it goes white, but then hopefully take the other trade when it goes white in the other direction.
Now, I just want to say at this point, for everybody who watched that, because that was as technical and wild as it gets. However, Bennett has several videos. I mean, I would say the word several on those topics explained in like 5, 6, 7-minute chunks where he's showing you real world examples that have happened. And they explain it. I mean, I literally got it probably the second time I watched one of those videos or short videos. I'm like, I felt 95% comfortable with it. You know, not that I knew everything or that, you know, I was an expert. I'm not suggesting that. I'm just saying that he explained in a way that it's like, all right, that sort of makes sense. Like he had one video in particular that's like, hey, here's a simple strategy for trading using that MFI and MACD and, you know, and it was very simple. And it was simple. It's like, hey, when it's this, you've got a buying opportunity. And when it's this, you've got a selling opportunity. And obviously there's other things you can do and there's other, you know, ways to trade. But it's like if you just want a simple way to start, and I started, you know, doing some of my own. But so check out his channel for a little bit more in depth on that, guys. And it sounds more complicated than it is. It is complicated, but it's not as complicated as you would think. I don't know if I'm not explaining that very well.
I think you did. It's the theory behind it. Once you understand the theory behind why this happens, then you can understand the rest of it. If you just understand the psychology and the reasons why price goes up and down, I mean, the world is yours. You can understand the basics of the markets and go from there.
Right. And so, and this idea of technical analysis is using these indicators and so on to make, here's where the poker analogy comes in, to make a good bet, to make a bet that has a high probability of paying off. Does that mean it will always be a home run or even a single or a double, to use a baseball analogy? No, not necessarily. You know, because markets are volatile sometimes and things happen, but that's kind of true with all investing. I mean, that's true if you think I'm going to buy this house and it's going to be worth X number of dollars 10 years from now when I sell. Maybe, maybe not. People in 2008, 2009 found that out the hard way. You know, it's like, not so much. So it's not a sure thing, guys. I don't want you to walk away and think, oh, this is a license to print money. It's not that at all.
Yep.
All right. So, but given that fact, Bennett, because I know somebody going to ask me, but can anybody really do this, or do I need like some, 180 IQ to really master this, or some sort of technical background?
Yeah. The beautiful thing about trading that I love and continue to love is that I like to say trading is as complicated as you want to make it. If you want just a simple strategy that you trust and that you understand, that doesn't take you more than like 10 minutes to learn, that's fine. You're trading the market, and if you give good risk management, you'll be fine. But if you want to go deeper and to go into very advanced theory of why things happen and stuff like that, then you can do that too. But trading is like a canvas, and you can paint as much as you want on that canvas. It's all up to you.
That's a great example. And Betty said, I'll subscribe to Ben. I hope he has some good beginner vids. Yeah, search his channel for the word beginner, and you're actually going to see some. And that's kind of what I did. I was like, I think that's how I found you. Like I was looking for, trading
beginner strategy,
and your video came up as suggested. And I went, oh, let me check this out. And it was just a chart. It was like a candlesticks chart, like we were showing a moment ago. And I'm like, it didn't tell me anything. But it was great. So how often do you trade, Bennett? How often do you trade, like daily, several times a day? What does that look like?
Yeah, so typically these past few weeks, I've been trading a few times a day. I've been trading altcoins. And just to talk about, I promise you guys, I'm not going to get super deep into the theory and why this happens. You can check that on my channel if you want that. But I use three things for trading. So the first thing I use is Fibonacci numbers. And a lot of people might be like, wait, Fibonacci numbers those are kind of just like random plot points on a chart. And the really, really interesting thing about using Fibonacci's is that they're not, and that you can look on really any asset, especially crypto, because we don't have as many big banks and institutions trading it.
Right.
With crypto, you could see beautiful 61.8 retracements. And if you check out my Fibonacci series on my channel, then you would know what I'm talking about. But basically why I use it is because the Fibonacci numbers in nature dictate the rules of expansion and contraction. So if you look at like flower petals, or if you look at like how trees grow, they grow according to Fibonacci ratios. And I mean, price is the same. It's something that's growing and then not growing for a bit and then growing more. So we can use those Fibonacci's to find likely points of reversal and then trade those. So that's my first thing in my toolbox that I use for my day trading, okay? And the second thing I use is sentiment analysis. I know that might not sound clear right away, but what I basically do is look at what other people are doing, like what I had said before. I look at what positions are in a market, and then I try to do the opposite of what they just did, and then try to make money like that. And it's really as simple as that. And the third thing that I use is just something called a volume profile. I know these terms sound like way more hefty than they actually are. The volume profile just looks at a price chart. And traditionally, you have historical volume that's plotted on the x-axis. You see candlesticks, and then below it, you see those volume bars. But what a volume profile does is it puts on the y-axis, and it tells you the most traded prices and the least traded prices. And what that tells me is where a lot of people are getting into positions and where a lot of people aren't really doing anything. And that makes it really interesting because when I see price getting near one of those spots where there's a really long bar for volume profile, where a lot of people have gotten in or out of positions, I can expect some consolidation because those people who were in positions before are probably going to start exiting. Some might enter, which is going to cause the market to do this. So I use those three things in conjunction: volume profile, sentiment, and the Fibonacci sequence to day trade.
Nice.
Yeah.
And I know Fibonacci, I think that was in the Da Vinci Code too.
Yeah, it's everywhere. Promise
the golden ratio, right? Yeah, it's kind of an interesting 1.6. It's kind of blows your mind when you start looking on your body and you start seeing all this ratio.
Yeah, it's like crazy ratios, like face height to width, like stuff like that.
Yeah, is everywhere.
Dictated by Fibonacci's. Yeah.
All right, so that talks about how to do this and so on, and of course, guys, as we've said all along in this video tonight, you got to have a mindset for anything you do. And if you're going to start investing money in anything, in any venture, whether it be reselling, like we talk a lot about on our channel, whether it be some sort of stock venture, whether it be in cryptocurrencies, always be prepared for the eventuality that it could go to zero. You literally could have none of it left. So it's not a huge risk in a lot of cases, but it's always a possibility. So I just want to make sure that people understand that. I don't want anybody to say, hey, you guys said it would be, I would be rich in 6 months.
Yep. I'm actually just going to say, I would say the mindset is so important that I would actually even say it's 90% of what trading is. You can learn, you can have a strategy, but if you don't have the proper mindset, then bad things can happen. And there are two types of mindsets that I've seen with a lot of traders that I've talked to. And if you're beginning to trade or want to trade, then ask yourself, what type of trader mindset do I have? So we have the fixed mindset and we have the growth mindset. The fixed mindset says, hey, I'm looking to make blah, blah, blah per week. And so that sounds good in theory, but here's what ends up happening. If someone experiences a loss, that fixed mindset is going to make them try to chase their losses to try to turn that into a gain. And that could cause problems because that's taking on more risk, and more risk, the more you lose. And it's terrible, but eventually you could drop to zero, like you had just said. But then on the other side, we have the growth mindset. And the growth mindset is positive. And the way that they look at trades is as a win-win. If I make money, great, I made money. If I lose, great, I just paid for a lesson.
Right.
The market just gave me a lesson and I'm A-okay with it. I am not going to chase losses.
Right.
I'm just going to take it as it is, reassess if I want to re-enter or just call it a day and move on. And you could probably imagine which mindset is going to create a better trader. Growth versus the fixed mindset. I'll take growth mindset over the most knowledgeable fixed, I need to make this amount of money mindset, because that's just going to blow up your account.
Well, we talk about that on this channel a lot, and we're talking about building an e-commerce business. You pay for lessons sometimes, and you can't look at it like every setback is truly a setback. It is something you learn, and sometimes you learn that's just not the direction you want to go, and that's fine. But you absolutely have to take a mindset, like a learning mindset into this all the time. You're never going to know it all. You're never going to master things. There's always more to learn. There's always more more hurdles to jump over. But no, you're dead on. You're all over, Bennett. I mean, mindset, we talk so much about that on this channel. Like it's everything. Like without it, nothing else really matters. Yeah,
you can know as much. You can be #1 trader by whatever metrics. But if you don't have a healthy mindset, I can't see how you'd survive the market.
Right. Right. The ups and downs will kill you. You almost have to, when I played a lot of poker, we talked about, so you had to be kind of dispassionate about money. And that's a hard thing for people to do because they put value on it instead of what my friend, when he stepped up a level, he was uncomfortable for a while because he's like, man, that's just so much to put in. I was like, if you're thinking that way, drop back down, because if it's the right play, if it's the right move, it's the right play, it's the right move. You still, whether you win or lose, it's the right thing to do. And a lot of people don't understand that. They don't want to take a risk without some guarantee of success, and there really isn't a guarantee.
I would even say if you want to trade and you want a guaranteed profit every day, or you want guaranteed success, don't trade. Just leave it. Maybe invest, but just don't do it, because every trader has to lose some money. That's just part of the game. Yeah. I have the best trader in the world, Warren Buffett, has, every investor and trader has lost money. And if you're not willing to have the mindset of, hey, I can lose money, be healthy, and I just, then trading's probably not your thing. So that's what I'd say. And I do understand your analogy with the poker, like moving up, like, NL5 to like NL like 20 or something like that. Because I did used to play a little bit of poker, so I do understand those analogies.
Yeah, and there was a situation yesterday, and real life happens. I was actually doing some trading yesterday.
Yeah,
and I had bought, I think it was Bitcoin. I bought some Bitcoin, and it was getting close to the level where I was going to sell. I was approaching my target. And I actually had put in a limit order to say, hey, when it hits this total, sell it all, and I was not far from it, like probably 1/10%, 0.2%, not far, maybe. I had to step away from the computer for about 3 hours, honestly. When I came back, I was down 8. And I did not have any kind of order on the back end saying, hey, sell if it goes below this, and stop. And then I ended up selling, and I watched for a little bit. I was like, oh, man,
jeez,
that stinks so bad. I would have sold way before that, but I learned a lesson. You know, I learned, like, if you're going to have to walk away like that, make sure you have, you know, you've taken the precautions to say, hey, if it turns south against me, even though I was so close to where my goal was, have a way to get out of it. And I didn't, and I paid the price for it. It wasn't a lot of money, thankfully, because I'm doing this little challenge and it doesn't, you know, involve a lot of money. But it's just, you know, that's the kind of things you have to, I didn't get mad about it. I'm like, all right, the market told me, hey, if you're going to be dumb enough to walk away and not have anything there in case, you know, it goes the other direction, this is what can happen. And it did happen. So
it is, you know, trading without what he's referring to for that, like if price goes down, I'm going to limit my loss. That's called a stop loss, because, you know, it stops your loss.
Right.
I have seen so many traders come to me when they don't trade with a stop loss and they become trapped in a position. So like, let's say you buy something, this didn't happen to you, thank God, but let's say you buy something and then it just tanks and you do not want to sell because, you know, loss aversion.
Mm-hmm.
And you didn't put a stop loss in place and you can't sell unless it goes up, but then the price keeps going down. You become trapped in the position because you're not going to sell unless you have break even. And this happens to so many traders that don't trade with that stop loss and with proper risk management. So I see that all the time. So if you're getting started or if you want to get started, always keep that in mind. I should always limit my losses because it's better to take a lesson than to wake up 2 months later for the asset to be, you know, minus 50%.
Yeah, and my friend Mr. Sadie's in the room, and he likes to play poker as well, and that happens in poker a lot. Someone loses a big hand, then maybe they were way ahead in, and then they spend the next 6 hours chasing the loss.
Yep.
And even if they get back to even, it's kind of like, you know, but a lot of times they don't because their mindset's all wrecked. You know, they're like, I can't believe that happened, and you know, they're just in a bad mind. They'd be better off walking away and go do literally anything else other than sit there at that table. And, you know, you have to be able to be dispassionate about this to some degree.
You do.
You know,
you have to just, the best kind of trading I would say is rule-bound trading, where you have rules and you follow those rules to a T. Because that way you take some emotion out of the game. When you're using, you know, more like discretionary trading where, hey, I think the price is going up, stuff like that, you know, bad things can happen. But if you say, okay, if the price goes here, or if, you know, this indicator tells me this, I'm out no matter what. If you can follow those rules, then you can really build a consistent strategy.
Right. Right.
You know, and I think same with like with your poker example of chasing your losses, that happens in trading, that happens in so many things. So just, you know, it's hard for me to say, but when you feel the urge to chase a loss, just try to reevaluate and just take a few minutes. Because sometimes there is a good trading opportunity there, but you don't want that. You don't want to invent a trading opportunity just because you've lost money.
Right.
Because, you know, that's minus EV. So.
Right. Nice.
Yeah.
We've got a couple questions that have come in here recently. And if you guys have questions too, please type them in the chat. Type the word question or question marks in front of them so we can differentiate them from a different comment. Ryan asked, you have to be 18 to trade.
You know, I don't really, in the US, I think you do. In other countries, I don't know, but I think you do have to be 18 to trade and invest, correct?
Okay. Yeah. And check your local and state laws there, guys, just to, we're not lawyers. So
no, I don't really know the rules behind that.
Yeah. And some of the platforms probably have rules too. And they're like, hey, you must be this age too.
They require a driver's license. So that way they can tell, you know, you are who you say you are and that you're over 18. So
Amazon Seller 99, who is not a big fan of cryptos from earlier comments, which is okay. And we like differing opinions here. Isn't a stop loss risky in crypto because the prices can drop drastically for a few minutes and then jump back up? In traditional trading, yes, stop loss is a necessity, but not so sure for crypto. What do you think about that? Stop loss.
Completely fair. Yeah, that's a fair point. I mean, I don't agree with it, but it is a fair point to bring up. Isn't a stop loss more risky because you get that, you know, we call it a whipsaw in the market, when if you buy something, it hits your stop loss, then goes up again. But here's the thing. don't think about it in a short-term mindset. Think about it in a long-term. If I have this trade, 100 times and I get stopped out an X% of the time, then I'm still afloat. I can still make money. But if I don't trade with a stop loss and I just buy when I think the price will go up and then the price shoots down, and I don't have any protection, then I could lose it all. So think about it that way, that there is a chance that you could lose all of your money when the price just shoots down and you become trapped in the position because you don't want to sell. So with any market, I have to recommend a stop loss. Just understand that this kind of market is going to have those low tails that's going to maybe hit your stop loss. And if you want, you can take on a little bit more risk and put your stop loss a little bit lower and put your take profit a little bit higher so that you still have the same risk reward, ratio, but you're a little bit more protected from those like low tails that might form.
Right.
And then if you want to trade more advanced, and this is just, another thing you can check out on my channel, you can actually try to put buy orders at places where a lot of people might have stop losses. And that can get really interesting, where you're buying at spots where a lot of people are selling. And then you get that perfect price reversal.
Yeah.
But that's all up to you. If you want to go more advanced and do it and like look at it that way, you can. But to answer it simply, you got to put a stop loss.
Doing the opposite of what everyone else is doing. We just talked about that today earlier on my channel, the herd mentality.
Yeah. The herd mentality is very present in crypto. Absolutely.
Yeah. I'm going to show you real quickly here my we're going to do their screen share real quick. And I'm not sure, Bennett, but it might be that like when you talk, it might be jumping the shot back to you. But I'm going to show you I'm going to explain my challenge here real quick that I'm doing for everyone. You can give me your take on it, whether it's even realistic or not.
Yeah, we'll talk about it. That's fine.
Because we haven't, because Bennett and I have not, talked about this other than just sort of, on the surface. But it was kind of inspired by some things, he said and some other things I read and so on. So I'm going to show you guys a screen share of a spreadsheet. I love spreadsheets, Bennett. It's just what I am. But anyway, this is a real simple one that I created for a challenge I started back on the December 17th, which was basically 3 days ago. And I'm just recording what I started. I started with basically $200, $199.35. That was some money I actually already had on Coinbase, and I transferred it over to GDAX, which is they're basically the same company. And my strategy is really simple here. I'm buying either Bitcoin, Litecoin, or Ethereum. I'm buying it sort of a low point, and given some of those numbers we talked about earlier, MFI and MACD and so on, using those indicators, and then just trying to make 1%, or even just a little higher, because at first I was doing it with some fees. I was doing some market orders because I was kind of a noob. But then I started figuring out the limit orders a little better, and I was like, hey, I'm not paying any fees. That's a good thing. And just trying to, here you see the big loss I had, yesterday when I was away from the computer, and it really sucked. But this is what's crazy. And Bennett, you're probably going to be like, I don't know if you can get to that point. So this is $200. I'm not going to put any more money in. And right now it's sent at $203.97. So it's a little bit. And I haven't spent a ton of time doing this, just FYI. But I put in here, hey, $200 or $199.35 at a 1% rate every day. And just trying to grow that every day by 1%, just, if I can average that. And here's where it gets crazy, guys. And this is where you're going to say, that's impossible. 2 years from now, 1% every day, $200, never adding, oops, I went by it, grows to this. So now that's not taking any money out the first year, and it's taking out 10% of profits each month after in the second year. So there's 10% a month, 10% a month. Now, all right, so that was a little crazy and wonky. I get it, but yeah. And I'm probably being super, super optimistic here. And I'm a big believer. Hang on, let me get rid of that. Let me stop that. All right, there we go. Should be back. But I'm a big believer in like small incremental gains and learning, and I don't know that I'll even hit any of those numbers. What do you think about that?
Yeah. First of all, absolutely kudos to you for keeping a trading journal. So many traders don't like to have that kind of like journal entry, but you do. Right. That puts you leagues ahead of other traders who are trying to day trade like you.
Oh, cool.
So yeah, absolutely keep recording, because it's super easy to remember mistakes. to also just have a log of where your profits and losses are. And I think you'll also probably not be chasing as much, chasing these because you're writing them down instead of, having a mental count. That can be kind of tricky. So awesome there. Sweet. Having a set target every day, well, what I would say on that is that as long as you're not chasing that 1% gain, if you go down 3% and then you're still chasing that I got to make 1% a day, and then you go down another like 5%, that's where things get a little scary.
Right.
I always tell traders with, how much capital do I want to risk? If you can, if you don't mind losing all of your capital, then you can trade with it. I know that sounds harsh, but that's the kind of mindset that you should have. That am I not risking too much? If you're not willing to lose 1,000 in the market, then you shouldn't be trading with 1,000. It's as simple as that.
Right.
But I would say that a 1% goal per day, it is unreasonable, but it's fine because
good.
If you it's not going to burn you. You're probably going to be okay. If anything, I would recommend doing monthly, like bare minimum monthly, but daily. If it's just a benchmark, it's fine. But if it's a hard rule, it's probably going to blow up your account.
No, and that's great feedback. And my thought was, and one of the things I think I mentioned to you, I wasn't sure like where to kind of set that loss at. Like, all right, I had this target for this trade, and now it's going down. Where do I pull the plug? And and you've talked about support levels and so on here, but I'm not super versed in some of that stuff. And it's like, is this just a little blip, or is this like a legitimate, trend where I'm just going to get crushed? And I still need to learn that part. Like, all right, I'm down 5%, whatever, done, whatever the number is, given the situation. I don't know. That's stuff I still need to learn. But, I was like, I'm going to just be super ambitious and go after like some ridiculous compound interest goal that.
Yeah, it's fun, 330K in 2 years.
That's insane.
you would be the by far probably the best trader that I've ever heard of.
Nice. Well, and I wonder too about liquidity. Like when you start getting those bigger amounts, can you execute a trade quick enough to get in and out of it? Because it's not simple, right?
Absolutely, liquidity does become an issue, especially with an exchange, a crypto. So like when we have just traditional like Forex and stocks, that's not an issue. 300,000 is a blip, in the currency market. But when we're talking about a cryptocurrency exchange, some bad things could happen.
Right.
The reason why liquidity is a problem is like, let's say that I want to offload like 1,000 Bitcoin, just a crazy high number. Right. If I hit sell market order, what's going to happen is that the market's just going to rip down, and your initial thought will be like, hey, isn't that good? You're putting at a lower price. It's not, because you're selling at that first price. You're hitting that first order, but then you're selling at the price below that and the price below that, and you're selling at worse and worse prices.
Right.
Yeah. So instead, you probably want to sell at one price, right? The maximum price that you would hope to sell at. You don't want to sell all the way down. So with liquidity, typically what you want to do is you could do something called laddering, where you basically put like 1% or even less of your gigantic limit orders throughout prices, so you can slowly offset your position instead of just selling it all at once.
Right.
So if you did have 330K and you were on the GDAX exchange, maybe you would be like, hey, let me just put a limit sell order for 5 Bitcoin here, and then 5 Bitcoin here, and then you just slowly sell it off at better prices, and you don't pay fees.
And that's something that CEOs of companies do when they're selling their own company stock, because if they own a big share of it, a big chunk of it, and they go and they try to unload it all at once, the price goes like this.
Yeah, if they own a lot, that's gonna be bad.
They usually sell like in regular intervals.
Like, hey, to not disrupt the market.
Right. Because that just hurts them and their company's share price too. So, all right. So my goal is unrealistic. I got it. All right.
You can do it though. You can, with that growth mindset that we talked about.
I may need to readjust. I may need to adjust down a little bit.
Yeah. I would just say monthly profit target of like 3% monthly. I know that sounds low, but it's like a stable first month benchmark if you want to do it that way.
Yeah, because like,
But you got
going back
this.
again, using our poker analogy, if you won like, 60% of the sessions you played and roughly bet about the same amount of money, you would be doing fine. You would be winning.
Mhm.
Of course, that's not the way poker is. Sometimes you're betting really big in one hand and not much in another. But so yeah, if you could win, 60% of the month and you're roughly risking the same amount of money, you're probably going to be up, especially given this is a fairly cheap way to trade. But
Yeah, no
um,
fees.
so what does the future of this crypto investing look like? Like in general, in your opinion, Bennett, and also for you, what does this
Mhm.
look like for you in trading going forward?
Okay. Well, to answer your first question of what does crypto hold in store for the future? The basic answer is, I don't know. But the secondary answer is that if we look at, for those who might know, futures contracts just opened up on the Chicago board and also on the SIBO and also on the CME, the Chicago Mercantile Exchange. And this is showing a major transition of Bitcoin from like this decentralized, it still is decentralized, but this like internet coin to more of a Wall Street traditional asset with these futures. So we're already beginning to see, it go to Wall Street. And even before the futures contracts, we've had big banks buy this up. And some have even started to use blockchain technology. So I can confidently say that I think that blockchain and cryptocurrencies are on the rise and will continue to be on the rise. And I'm not going to say they're going to, replace USD fiat. That's quite lofty.
Right.
But I do think that it would not be unreasonable to think, within the next decade that you might find yourself paying Bitcoin for pizza.
That'd be all. I mean, that'd be an amazing evolution. But yeah, I
Yeah.
tend to agree with you from what I've read. It's or something similar, and it might be Bitcoin. It might be some other.
Yeah. We don't, Bitcoin is the, market dominator, but there's, it's free competition. There's no one owns this. So a rival could come up and usurp Bitcoin and become, the number one.
So what do you say to Gene, who says in the chat, "I don't
Mhm.
want to sit at my computer all day, Bennett. I want to invest and let it do its thing, and I'm not really
Yeah.
good at math." That's what you
Absolutely
said.
fair, man. Yeah, no problem. You don't have to get super deep into theory. So you want to invest in Bitcoin because you believe it has a future. Okay. Well, what you can do is just buy it in a wallet and then just hold it for, as long as you want to hold it. But just ask yourself a few things before you go in. Uh, Make a plan. So are you going to, you can do a few things. Are you going to hold it no matter what? That's just like, ultimate investing. I don't care if it drops 90% or gains 300 million%. I'm holding it for at least 2 years.
Right.
Do you want to take out portions every month? Do you want to take it out if it loses and then keep it if it gains? Do this before you invest. Because if you don't, your emotions might take over and you might be selling at a bad price. So be realistic. And then when you write down or think about what you want to do, then invest. But I would recommend that you look up a little bit more about how Bitcoin and blockchain works so that you know exactly what you're investing in and how that technology can grow in the future instead of just investing blindly. Right. So that would be my answer to your investing, Gene.
Justin Pac-Man asked, any advice to reduce fees and keep them to a minimum?
Oh, great question. Fees are going to be really on every exchange except GDAX. To reduce fees, I would say have the discipline to always use limit orders instead of market orders. For those who don't know, whenever we use a market order for GDAX, we're paying 0.25% for buying or selling. So if we use a market order to enter the market and then a market order to exit the market, we're paying about 0.5% in fees of our trade. That's a lot.
Adds up.
Yeah, it does. Especially it destroys your win rate. If we use limit orders, we have 0 fees. And like I said, 0 deposit, 0 withdrawal. So it's all on you. So that is the best way that you can eliminate fees is to just have the discipline to use limit orders on GDAX and just stick with that. With a stop loss, of course.
Right. And Betty asked, is it risky to leave your coins on an exchange instead of a wallet?
Hacks have happened, across the board. But what I would say is instead of taking my advice for this, you could Google different exchanges. You could Google different wallets to see which one probably is the safest. I will say, just as a I'm not telling you to put your money there, but usually the more popular one of these wallets is, or the more popular an exchange is, typically it's going to be a bit safer.
Right. And some are insured.
That's not true.
Right.
Some are what?
Some are insured, I think, by the FDIC.
Yeah. So if you're looking to long-term hold for like 3 or 4 years, look for a site that's probably not going to be, that's not going to close down, that has a good future. And there are a few obvious ones in name that I can think of, that will probably be around for the next few years. So I would use the more popular ones. Yeah.
Okay. So, all right. So Bennett, tell everybody a little bit, we're coming to the end of our hour here. We're right at it actually. So tell everybody about your channel, and I know we've got a link to it in the description, guys. And tell everyone a little bit about your channel. What can people learn from you on your channel?
Yeah. So my channel, Bitcoin Trading Challenge, I have a large variety of trading strategies and predictions and practice. So I range from videos for more beginners who maybe have never traded or who don't really know about crypto. And then I also have a little bit more advanced theory that if you're willing to put the time in and you want to go a bit deeper into how this works, then you can watch my more advanced videos. I have a playlist section where I have strategies and predictions that you can click which one you want. What I would recommend if first time viewer of my channel is that you probably would go to my video called To Be a Crypto Day Trader. In that video, I tell people different videos to go to and how to get started with the whole process. With individual videos, I would recommend you watch a few of my strategy videos, like you had mentioned the MACD MFI strategy, the simple 5-minute. Use that. But also definitely look at my, how to trade crypto volume, which is looking at how to analyze volume with price. And then also looking at like how to read candlesticks so that when I'm looking at a chart, I can know what I'm looking at. So watch both like basic, like how to read an order book, how to look at candlesticks, and then also look at some strategy ones that are going to be kind of interesting and maybe can even get your feet wet if you want to get started, trading the day of. So that, and then the more advanced stuff is there if you want to go for that. So yeah.
I'm going to type that in the chat just because somebody was asking. And so it's the Bitcoin Trading Challenge.
Yep.
Kaaren just did it too. One of my rents. She's in the other room.
Okay.
And let's see here. Ryan Roman. We'll take another question or so here just to finish out. Can you go over buy and sell orders one last time?
Yeah.
I guess he means maybe limit orders, I'm guessing.
First market.
Right.
Yeah. So think about it this way. We always have a transaction between a buyer and a seller. And we have two types of orders to do that, right? We have a limit order, and this rests on the exchange, on the order book. So I could say, I want to buy it at this price. And then I need to get something called filled. And to get filled, what I need is, like, let's say it's a buy limit order, right? I need someone to sell to me so that I can buy their Bitcoin. And what they would need to do is use a market order to sell to me. And that is going to be the two-part transaction that's going to happen on an exchange. So buying and selling, what's listed in order history, because you might be like, wait, if every transaction is between a buyer and a seller, why are we categorizing buying and selling in volume?
Right.
Well, what they're showing you is who initiated, who made the market order. So if I have a buy limit order and you sell your market order to me, you initiated, so it's going to show up in red in CryptoWatch because it was a sell. So that's really how limit orders and market orders work, and the buying and selling, of those orders.
Yeah, and I think probably most people are probably most familiar with market orders because they may be in how they bought things like and you tend to pay higher fees and things with those because it's
almost always
it's like an instant guarantee for the most part of the order going through, unless I guess it was something crazy. But give me 10 million Bitcoin. So that would be impossible.
Yeah, good luck with that.
Yeah, good luck with that. So, all right. Well, listen, guys, I want to thank everybody for coming out tonight in the chat and so on. And of course, I want to thank Bennett, my guest, for just dropping the knowledge bombs. Really, I mean, man, it was amazing. Like, I learned so much. I learned that my goal is ridiculous. There's no way it's going to happen, but that's okay. That was a learning experience.
Never say never.
Or I'll be the best trader of all time.
Yep, you will be.
So there's two different ways of looking at that. But I really learned a lot, and I hope you guys did too. If you didn't, go back and check out this replay. But more importantly, check out Bennett's channel. I mean, he has short videos, guys. I know here on my channel, every video is long. You guys are like, man, can you make your video shorter? Bennett does that. So I don't even know if he has a video over 20 minutes. Maybe he does, but most of his are short, but he packs like so much knowledge in there, and he's really, really good about answering people in the comments and answering questions and so on, which is, but there's a lot to learn with this, but it can be, learned to a level where you can, be adept and start going forward. And I think Bennett's a really great resource. And man, I just want to thank you so much for coming on tonight.
Thank you,
was
Jason.
Amazing.
Thank you, man. Yeah, I'm glad to be here and talk trading.
Yeah. All right, guys. So listen, that's going to do it for us. We're going to stick around for a second, but you guys have an awesome night, and we'll see you back on probably Friday in a couple days. So I hope you guys have an awesome rest of your Wednesday night. Thanks, and take care.
Thank you, guys.